The economic turnaround has been the biggest story of the year. But turning the economy on its head has been no easy task. It took the combined might of India Inc. and the government to do that. But what are the challenges ahead? Lakshmi Subramanian has the details.
The economy is looking up, demand is back, employment numbers are rising, and chances are that India might just outperform its GDP target of 7%.
This performance in highly adverse circumstances indicates the resilience of our economy. It also vindicates to a large extent the corrective action taken by our government to manage the downturn. Like other countries, we resorted to a significant stimulus, and we will take appropriate action next year to wind this down.
Action that may be required because India is now battling high food prices and rising inflation.
If the price pressures, the inflationary pressures mount up, then I think the Reserve Bank of India will have to think about what it needs to do. It may not change the policy rates, but it might do something with respect to liquidity, and as a first step it may stop injecting further liquidity into the system through open market operations.
That then sets the tone for what's coming in the year ahead. The question though is, how did India find itself in this position?
The growth momentum of the economy must be restored, notwithstanding the decline in international demand for our exports, and the route to do that is to strengthen the infrastructure investment both in the public sector and in the private sector through the PPP route.
This sort of counter-cyclical spending by the government wasn't unnecessary. But I must say that this very rapid expansion in borrowing program has impeded monetary transmission.
Since July and August, credit uptake across all sectors has started picking up. It shows that, as if there was no problem in the economy. And even in agriculture, for State Bank of India, year on year, the credit uptake in agriculture is higher by about 35%.
As the money supply grew, interest rates fell, demand rose, and inflation, which was at negative levels, started inching upwards. But the rise in inflation is now becoming uncomfortable.
If you go back and look at the way we have sort of grown at 8-9%, it's almost entirely been driven by an investment boom. And there's a very strong correlation between real interest rates and growth. And I think if real interest rate is even increased from what the elevated levels right now, I think that that makes the chances of an investment revival that much slimmer.
The deficit reduction now does remain a big challenge for the government in the years ahead, especially since India relies a lot on capital inflows from abroad to help it deal with its twin deficits.
If you sort of extrapolate from the point that recovery would be, floundering, would be patchy, then the policymaker would react to that with more stimulus measures, fiscal and monetary. That would in turn slowly start raising inflation expectations, and at some stage in the second half of next year, we might cross the tipping point in terms of inflation expectations at the level of the public. So in that sense, actual inflation fears should start to surface.
Those fears have already begun surfacing, and it is likely that the government may have to start the new year in the same manner that it started out last year, firefighting. So if growth was the big challenge last year, in the coming year the government will have to battle inflation and capital flows.